Kitch and Neeil on Talk 100.3. Well, Indian equity markets are poised to respond positively to the recent statements by the US Fed Reserve regarding interest rate cuts. So on Wednesday, the Fed maintained the key interest rate at a 23-year high of 5.25 to 5.5, whilst also acknowledging that there will be some progress to its 2% inflation target and possible rate cuts. But what does this mean for Indian markets? Will they mirror the sentiment? And will they potentially see significant gains since August 1st? We have to wait and see what's going to happen.
Well, yes, we definitely have to wait in. But, the moment there is a speculative information or news that comes out that the Fed might just do some changes to the rates, the markets already start preempting that and react in that way as well, Kitch.
And that's why we're going to speak to the financial professional Vinay Chaudhury. He specialises in partnering businesses and offering financial support. Vinay, thank you again for joining us on Talk 100.3.
Pleasure to talk to you, Kitch and Neil.
It's always good. It's always good to hear your voice. It's so comforting. I feel like I've instantly got more money. When we look at this, the Fed rate, the Fed Reserve in the US, they're hinting at the September rate cut. We've seen, over the past couple of days, the European markets have moved higher as the US Fed are pointing towards that September cut. How do you think the Indian markets will react?
So I think there's not going to be any direct significant impact on the Indian market, but it does impact the sentiments. Mm-hmm. If the US is poised to reduce interest rates, with Europe, UK, Canada, and New Zealand already having reduced interest rates, it could lead to a cycle of lower interest rates at a global level as well. So that definitely would have an impact on the sentiments in the market, expecting that eventually corporates that borrow in US dollar could be borrowing at lower rates. It could mean a possibility of, in future, the central bank in India, which is Reserve Bank of India, could also possibly reduce interest rates on somewhere down the line as well.
So the moment the Feds reduce the interest rates and there is a global trickle effect as well, as you mentioned, does this then mean that the buying capacity or the borrowing capacity of the individual goes up, and we could probably see an upstream in the economic cycle of buying?
To be honest, not really much, because a quarter percent is not really going to make a big difference.
Okay.
As I said, it's more of the sentiment rather than the real financial impact.
Mm-hmm.
So if interest rate has been reduced, it's giving a signal to the market more interest rate reductions are expected to come down the line.
Okay.
And that definitely will have a very positive impact on the sentiments in the market. That overall interest rates are going to be moving down, with other central banks already have taken the initiative, and now US also following through. You could expect interest rates at a global levels gradually coming down.
We are looking at they've got that target of 2% with inflation in America. If this rate cut does come, does it have any effects on inflation across India?
Not really much, because if you look at the Indian imports, it's largely been oil.
Mm-hmm.
That's a significant part. And there's not going to be any major impact on the oil with the interest rate movement. So inflation, I don't anticipate any change. When the interest rates went up, that did not have any impact on the Indian inflation. Same way, when it goes down, it should not have any significant impact on the Indian inflation as well.
But then when we look slightly further closer to home and here in the UAE, because the dirham is pegged to the dollar, any changes in the Fed rates will immediately be replicated by the central banks over here in the UAE. Would there be a significant difference as within the UAE as compared to what we had just discussed as we wouldn't see any significant difference in India, but would UAE respond positively on that?
Absolutely, it would, because the dirham is pegged to the US dollar,
Mm-hmm.
and has been pegged since 1981.
Right.
So, for example, the mortgage rates will start trickling down.
Mm-hmm.
Borrowing rates will start going down.
Right.
Personal loan rates could eventually start seeing downturn as well. So that actually, yes, so the borrowings will be going down. But on the flip side, people who are saving money, they would earn a little less interest compared to what they would be earning today.
Right. So then, as we always keep saying that, the real estate market, which has been booming here in the UAE, could see a little further bump in the people who are looking to buy, because I'm sure that a lot of investors were looking to hold on to their purchases and waiting for the Fed rates to go down.
Yes, you're right. But then at the same time, just remember that 55 to 60% of the purchases in the Dubai market is cash purchases and not mortgage purchases.
Right.
So definitely there is going to be impact on the real estate market in Dubai. And in my personal view, it's more of a demand supply issue rather than an interest rate factor that has been impacting Dubai.
Right.
There's been a good population increase happening in Dubai. A lot of people moving in, a lot of businesses moving in, a lot of jobs getting created, and property always takes 3 to 4 years time to come from the date a person intends to have a project to hand over. So the demand doesn't take 3 to 4 years. Demand happens immediate, and the supply takes some time. So that's where I believe the property rates have gone up, because the demand has outstripped the supply at a very fast pace. So interest rate will have some impact, not necessarily, as I said, again, a sentimental impact rather than a very significant fiscal impact.
When we look towards the Fed Reserve, they're very much on track for that interest rate cut in September. We know the vast majority of officials have said it is likely. Are your thoughts? I mean, we're preempting it. Is it likely we're going to see a rate cut to come down from that 5.25, 5.5 range? I'm actually, I would rather sit on the fence at this particular moment, because the Fed has actually said that they would like to see the interest rate to be going below 2%. Currently, it is still at 2.9%. Yeah,
it's been trickling down gradually, but I'm not. My personal view, I would rather wait and watch. I'm not sure if there would actually be interest rate cut. Though the July minutes that were released yesterday did say that maybe time is coming soon to look at the interest rate reduction, but it's just an intention. People would the Fed committee, FOMC as it's called, is still going to look at the data between now and mid-September, when the meeting happens, to decide whether there should be a rate cut or not. So I would rather keep my fingers crossed and wait and see.
Well, Vinay, if inflation is going up at 2.9%, can you tell my boss to give me a 2.9% pay rise? It's the age-old. It's a joke. It's the age-old question that we're all finding when there is a stagnant wage growth, and the impact that it always tends to have on the cost of living and the inflation. We know you're busy. We appreciate your time on Talk 100.3. Vinay Chaudhury, it's always a pleasure to speak to you.